notify me that she had some issues with connecting to the webinar. So her Wi-Fi went out. So I hope that she can connect by phone. But in the meantime, I'm noticing that the time has passed 7 o'clock here in Washington, D.C. So we should be starting, and I hope that Bettina at some point she can connect. As I said, this webinar, and I see a lot of people have logged in, so it shows how much interest there is in this topic. This webinar started from discussions that we have had all these organizations, IFAD, FAO, the World Bank, private sector organization, about what is the impact of COVID on agricultural finance, which of course depends to a very large extent what is the impact of COVID in agriculture. Finance basically responds to the problems and the issues that the real sector is facing. We have done quite a bit of work so far, much more about asking financial institutions and agribusinesses to tell us what they see on the ground level. And slowly, a picture is starting to emerge. I don't want to preempt the discussions, but today we have a very rich number of participants who represent organizations with members on that they see things on the ground. So it will be great to start exploring what do they see on the field that is happening, and what do they get the feedback from the members. A number of organizations like APRACA and AFRACA that they represent financial institutions, they start looking at what is happening. I'm very glad to say that we have a representative from AFRACA in today to talk to us about Africa, what do we see from financial institutions in Africa. I'm going to pass the word to Greta Bull, who is going to be our moderator today. Greta is the director of CIGAP. She's heading CIGAP, who is looking at the issues of agricultural finance among the broader issues also that CIGAP is looking on the microfinance sector. But CIGAP has also developed a very strong expertise and experiences in smallholder agriculture around the world. So Greta, the word is yours.
Thank you very much, Panos, and good morning, good afternoon to everyone else. It's great to see all of you here this morning. Just a couple of housekeeping notes. If people could keep their phones on mute while they're not talking, that helps keep the noise down on the line. There's a chat function that you can use in WebEx. So if you put your mouse up at the bottom of the screen, you'll see a list of icons pop up. The fifth one over is a little chat bubble, and you can just share comments and questions as we go through it. And that's how we'll take questions at the end. So do find the chat button, and we'll look forward to hearing what questions you have. So as Panos said, my name is Greta Bull. I'm the CEO of CIGAP. We have been looking in the agricultural space for a long time, and even longer at micro and MSME finance. And so really looking forward to and interested in the dialogue that we're going to have today. So just a couple of words to set things off. Obviously, you know, in low-income countries, agriculture drives economic growth, poverty reduction, and the livelihoods of many rural households, plus some urban ones. And since the majority of the poor are in rural areas and reliant on agriculture, it's critical to connect producers to better market opportunities, to expand decent work, and increase value addition across the agri-value chain, from production to processing to distribution. But obviously, COVID-19 is placing pretty severe strain on rural and agricultural livelihoods. People are struggling to access food and to access markets as both producers and consumers secure critical inputs and prepare for the next planting season. And at the same time, we are seeing massive disruption in East Africa with a very, I don't even know the word to use, biblical locust invasion. So on top of COVID, we've also got, you know, the usual kind of agricultural problems that are making it so difficult to manage. We don't know how this will play out, what the duration of the crisis will be, or how long, or how it will roll out in various countries, but disruption is literally happening simultaneously around the world. And that's impacting value chains and livelihoods massively, not only in emerging markets, but in our own markets. We read the paper every day and see some of the concerns that have come up about food chains here, and that has blowback around the world. So COVID-19 is likely to have cascading effects, starting with rural health and livelihoods, reaching into agricultural markets, and then to food security, and then potentially even to national stability. So it is a very serious topic, and one that we're going to learn a lot about today. So I have a distinguished panel of speakers joining me today, and I'm just going to let them share with you the insights on the COVID crisis, the ways we need to think about getting rural households through it, and what building back better looks like in this context. We have a lot to get through in this morning's call, so I'm going to hold my speakers to their allotted time slots so that we have plenty of time for discussion and some Q&A at the end. Without further ado, I'm going to hand over to my first speaker, Maximo Torero. Maximo is the Chief Economist and Assistant Director General of the Economic and Social Development Department at the Food and Agriculture Organization, and will be sharing with us a presentation on FAO data and analysis on how the crisis is impacting agricultural supply chains, and in that context, SMEs. So over to you, Maximo.
I hope you can see my PowerPoint.
Very tiny slides right now.
Sure.
But
it will go. It will go back. Okay. Okay. So here we are. Now it's big, I assume. I hope. So let me thank you very much for the kind invitation. Let me start on how we are looking at this problem, and we have two phases. We call the first phase is the containment phase, which is the phase still which we are not out, which is the phase of the lockdowns. And the job here is to try to understand what were the mechanisms and the channels of transmission, and how this will affect farmers and small farmers especially. So the containment phase, which is the lockdown, affects significantly the supply side, and it affected because of inputs, access to inputs, but labor. And this mainly affected the high-value commodities, so fruits, vegetables, meat, fish, milk. It didn't affect too much the staple commodities, because the staples are capital intensive in the big exporting countries. And the major problem for the staples, and of course for the high value, was the logistical part, how to move the commodity from the plot to the ports, and then those problems in the staple are starting to be resolved. There are some delays in ports, but it's moving okay. If you look at real-time vessel data, vessels are moving, and food is being deployed. On the high-value world, the situation is a little bit more complicated because of the labor intensity. Protocols were not in place initially to allow people to work and to declare the food system an emergency sector or a priority sector, essential, what is called essential sector. And that created significant delays in resolving the problems, but little by little these problems are being solved. Now, it also affected trade because of these logistical problems, which created uncertainty. And I will explain later how trade was affected. And of course, it affected the macro part and the exchange rates, which create different options because of the devaluations, which create a problem. And then there is the problem of the food demand, which is what we are observing as the major problem. So for me, the first phase is more focused on the supply side, and then the second phase is more focused on the demand side. So on the supply side, on the staple world, the good news were that we had enough stocks in the world, and double that we had in 2007, and also that we had a very good harvest this year. So supplies were available. The uncertainty came from the logistical part. So how I move the staples from the harvest to the port. And initially there were problems in key exporting countries, Brazil, Argentina, and so on. And as a result of that, there were some reactions in trade. So initially we had export constraints being put in wheat by Russia, which put an export quota. And although the quota was big enough to keep the same level of mobility of goods, it was a wrong signal. And the reason they put the quota is because of the exchange rate devaluation, which made very attractive to the exporters to sell their produce. So they wanted to keep part of the produce, as always, for the local milling. Then the next one was the rice quota being put by Vietnam, which was stopped in May 1st. And that also created some increase in prices of rice because of a very thin market. But today what we are observing is that these are going down. Today is 10, yesterday one more, but the share of the exports is less than 5% now. And also, if we look at the calories, it's around 2%. So it's very low. So the export restrictions are not a problem right now. We need to keep pushing to avoid that. Relative to what happened in 2007 and 8, where we have 33 countries that imply around 28% of the export. So this is now looking good, and we need to keep putting pressure to avoid more restrictions. Now, where is the biggest problems for us? And that's where it's also very worrisome for the smallholders, is the consequences of this law. And the consequences, the first shot is the reduction in GDP growth at the world level. Now, this reduction in GDP growth, IMF was kind of conservative and positive. Global level, they say -3%. But if you look at the disaggregation by region, you will see that the key areas that the produce from the African countries, for example, are exported are going to be in that deep recession. And also some of the Latin American countries. No? And Africa will go into a recession. But why I'm saying is extremely conservative or positive is because when you look at the distribution around the world, basically they are projecting still significant growth in Africa, in India, in Asia, and in Africa, in several countries in Africa. Now, we are concerned about this because we don't think necessarily will be the case. We hope it will be the case, but the numbers are starting to increase in terms of COVID-19, especially in the southern part of Africa and in some parts of West Africa, which is worrisome, and that's something that we need to be careful. Now, if we look at the labor, and we just got these numbers, this is the total labor on food systems. It's around 1.28 billion, and livelihoods implications of those labor force is around 3 billion. Now, what is at risk because of COVID-19? The job at risk is around 451 million, 35% of the labor force in food systems, and the livelihood is around 1 billion, 33%. So it's a significant shock in terms of labor, and this applies to maquila, to packaging, to processing, and so on and so forth, which in many of the commodities of the smallholders are related to other sources of labor, especially for females. So the expectation is that here will be a gender imbalance that we also need to look at. But these are pretty big numbers that we need to worry. Now, if we look at the undernourishment, the POU, the indicator that we produce, and we simulate 3 scenarios, a 2% decline in GDP, a 5% and a 10% decline in GDP, only for net food importing countries and for low-income food deficit countries, the numbers can go from 14.4 to 80.3 million people going into undernourishment in the net food importing countries. Again, we're talking around of 54 countries that we are looking at, but the situation also shows significant problems. And this is the import dependency of Africa, and they requiring external assistance. So again, Africa is one of the continents where we have the most food crisis countries, where we have the most external assistance of food needed, but also significant import dependency, especially in the west part of the country. Now, why I was saying that I was concerned about the projections of declining GDP growth in Africa. It's just a very simple map of Africa showing what are the major revenue sources. So the first problem is oil. If you look at oil, it is affecting Nigeria, Chad, Libya, and Algeria. The oil prices are close to levels that were not very extremely low. So these countries are really facing a problem of liquidity. Same cotton producing countries, Mali, significant amount of the cotton contracts are being cancelled. Coffee, we expect coffee not to grow anymore.
व्यक्तीशी बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला आहे.
Hello, can you hear me?
व्यक्ति से आप बात कर रहे हैं उसने अभी
Hello, can you still hear me?
Yes, Maximo.
Oh, okay, I don't know what was that. Okay, so significant countries in Africa will be significantly affected because the commodity prices will go down. And again, remember, this is a shock in demand, okay? So the people that used to demand for our commodity, for our food commodity from farmers, small farmers, no longer going to be there at the same level, and the countries also won't have the revenue to be able to buy and to import what they need to do. Just to give you an idea, this is where Africa exports: Netherlands, France, Spain, the US, Germany, and China, and the UK. All these countries are going through a huge contraction. And they are focusing more inside trade, inter-Europe, inside production. So clearly the demand will be reduced. And that is a problem for our farmers in Africa, in Asia, because they will have surpluses if they keep producing the same level where they are, if they are possible to do. The commodity prices were falling down, as I mentioned, and also the oil crisis that I mentioned, and the remittances, which is another flow of resources to African countries, which is important because this sometimes gives working capital to many of our producers, will be significantly reduced. The bank estimates a fall of 20%. Okay, so what to do and where we can move? And this is where we talk about the health food development rheology, because initially we only focus on health, and we believe that was necessary, but we needed to also focus on food. But now that we are also focusing on food as an essential sector, we need to think of development. We need to take advantage of the opportunities to resolve the problem. Why is it so important? Because for smallholders to be able to cope and have more capacity to cope with this resilience, we need to enhance their productivity and link them to safety nets so that they have a demand source from safety nets that they didn't have before. That implies standards, and that's why we need to help productivity. We need to reduce post-harvest losses, and this is losses, this is not waste, because the losses are high. And why we are concerned about losses? Because any production of trees, for example, or like coffee, fruits, will continue to produce the same as they were producing this year. If the demand is going to shrink significantly because of what I was explaining, then all that produce won't be able to go to the market. And that will create significant losses, what we call left in the field. So we need to find ways to reduce that and to create mechanisms of storage that will help that to happen. We need to remove artificial constraints, and we also need to address basic energy needs. And e-commerce here could play a role to help this and to give opportunities. For example, when we were referring at the storage tools, we are thinking of a more sophisticated warehouse retrieval system, which will have the cooling facilities, the drying facilities, storage facilities, but will allow also to interconnect through the financial system, through e-tickets, taking advantage of the cellular phone penetration. One of the things that we're looking, for example, is looking at planting calendars, how we can empower planting calendars so that we assure the harvest, and we assure the planting for the next season. In Africa, still is on time, and the lockdowns still are not so deep. Here, if we're going to encourage the harvest, we need to find ways to store, because they need to cope for the recession period of 12 to 24 months. So at least if we can let them cope for 12 months, things will get better, and the demand could be reactivated. But that needs to accelerate. So one of the things that we're doing is trying to bring best practices to traditional ways of doing storage, through science, through videos, extension. But also we need to move into more sophisticated warehouse systems or storage systems. And then finally, because I am over my time, I think it's important to look at trade issues and creating a new market for smallholders. And the most important option to create a new market right now in Africa for smallholders is interregional trade. This also applies to seeds and also applies to some South Asian countries. But interregional trade in Africa has a huge opportunity. It will not only create economies of scale, but especially will create a risk pooling strategy. So that you have an idea, today, share of African exports going to Africa is 21.8%, and share of African imports from Africa is 16.4%. The opportunity of growth of the interregional trade is between 6 billion to 20 billion, depending how it is implemented. The most important problem is not tariffs. Okay, tariffs are already agreed to be reduced. It's transportation, infrastructure, but especially non-tariff barriers. And here is where standards, food safety standards, will help a lot to integrate the smallholders and to have easy access to this new demand that today we don't have. And that will help them to cope with the reduction in the demand from the bigger countries, international community that will be reduced because of the recession. So there are many things that can be done in this area, and those are the main that we believe should be pursued. Thank you very much.
Thank you very much, Maximo. Much appreciated. So I'd like to move swiftly to my next speaker, who's going to share with us another view from the field. So my next speaker is Hannelore Bierland, who is the CEO of AgriCord and the president of Enable. She'll be sharing with us some background on what AgriCord and its partners are seeing in terms of the impact on farmers' organizations and their evolving relationships with agro-dealers, buyers, financial services providers, and others. So over to you, Hannelore. You have 8 minutes.
Thank you very much.
Please mute their phones so we don't get background noise. That would be great.
Hello, can you hear me? Am I unmuted now?
I can hear you.
Yes? Okay. Thank you very much for the invitation. Thank you very much for the very good introduction on the macro level. I will take you to another level and to the very local level of where farmers' organizations and farmers do their economic transactions. And so, according to us, it matters a lot there. First of all, I want to say that in general, there's not so much new challenges. It's just like a radio, which is put louder. So the challenges that were there already are coming more forward. And in that sense, it's also an opportunity. We see better the challenges and we can invest in them now, so that for the relaunch, which will certainly be there soon, there will be changes that come across faster. So that is how we look at it, and together with the farmers' organizations. First, I want to say that some of these macroeconomic analysis, which is very welcome, impact farmers' organizations at a local level, but also farmers, individual farmers, which make the organizations. I first want to say, for example, the fact that there has been at a certain stage less imported rice from Asia. That is just a very concrete example. It caused the perception of food shortages in cities, and there's been an enormous exodus from cities to rural areas. I don't think we always take that into account, but we hear from farmers' organizations that at this moment they have to feed many more people in rural areas. Yeah. So that is already a reality that we are facing. It obviously it also creates changes in the demand structure for food. Secondly, the price transmission has been very bad and fragmented. Farmers feel that. So even normally, if prices would increase, which for some commodities or for some value chains they have, it's not felt at a local level. So the markets are very fragmented, especially for the perishables and export products. There's really problems of getting stuck with the products. I mean, there's really terrible stories about that. Obviously, this depends on value chains and this depends on the context. When I look at the context, what we hear from farmers' organizations on everything that is perishable, they get stuck with it. I mean, I'm thinking about vegetables and the first speaker has talked about the labor intensiveness of it, but it's vegetables, fruit. For us, it's mainly because they're perishable that it's a problem. We can't stock them. They don't know when there can be transport, even like the previous speaker said, there is transport, but we don't know when. It's also dairy, obviously, and even poultry is under pressure because of the perishable products. And also every export product. It's not so much because of the macro issues, but because the administration is not working. Yeah, people are in lockdown, so farmers don't know where to go to get through the different steps of administration. And the more fragile the country is, the more difficult it is, because there's always steps added to the administrative part there. We have the same also for logging trees and timber. We also deal with farmers organizations who are in the forest sector, and we promote that a lot, forestry and agroforestry. Also there's huge problems for getting access to logging permits, to transport permits. So it means that the income goes down immediately. Other things that we feel, of course, the logistics go up and down. Some have that farmers organizations feel it. Some have some things are going better, others are not going better. Some things they're coping with well, we find, and that is not stressed enough, is with information and measures on the disease and on prevention. There's much more approaching of local radios, of local governments working together with farmers organizations, with local radios to transmit these messages. We find also that in general, the labor for agriculture, even though certainly it's been thinned, they've coped with it well. They're very well organized to help each other, even without the labor influx they normally have on the peaks. We find they cope well. What is a problem is the fact that young people, and certainly when I'm thinking of West Africa, in which the young people migrate a lot for temporary jobs in agriculture, they lose these jobs and their income. So we feel that the crisis falls a lot on their head as well. They don't have access to land yet, so they depend on seasonal labor over borders. And that they can't do now. So the young people are certainly under pressure, and that is something to be looked at as well, how they can be integrated and can invest in agriculture at that moment. So again, for us, that is a problem and a challenge that was there already. and the radio is put louder. So we have to look at that even, and at startups even faster than we used to. I think that everything that is communication-wise remains a challenge, but that has always been a challenge. So it's a good opportunity to see it now as a challenge and to invest in it. When I'm talking about farmers' organizations, there's everything that has to do with coordination, with collection of produce that they do from their members, but also the delivery of inputs, which they normally buy together to have scale advantages. Also their internal democracy. Remember, when you work in a cooperative business, financial governance is already a fragile issue. You have to work on it all the time. Farmers organizations and cooperatives have to invest in it permanently. But now that they can hardly come together and hardly communicate, this financial governance and this management is fragile. This is something really to be looked at and to support as good as possible digital communication. We do find that the ones that already had digital marketplaces go better. Obviously, the ones that already had did mobile banking as a cooperative, they cope better. So it's something that has to be speeded up, but it's not like everybody, that nobody has it. There are some who have it already. I think when we look at finance, farmers really, certainly in West Africa, where we have now started the planting season, where they need normally their input finance, not yet the trade finance, but the input finance, it's already, for some of them, it's been problematic. Remember, they depend on local institutions. Yeah? Very often it's microfinance institutions, but even local credit cooperatives. We forget them a lot. Sometimes even local saving groups, saving and credit groups. We see, for example, I'm talking about Brazil, who we think normally would be more progressed, and there's more institutional support for family farming. We find that there's a lot of banking measures, even for family farmers, the bigger ones for big businesses in agriculture. But the ones that don't get access to extra finance, to extra capital, are the credit cooperatives. They're not included in the measures of the government. So we think that's one thing. Secondly, the farmers are now, and their businesses, the cooperative businesses, are even within MFIs, the interest rates are higher because their risk rate has increased. Literally, you get classified under a risk rate, so they become higher. Some MFIs and farmers organizations have also really done a saving rush, and so they went to get their savings. Microfinance institutes not having enough liquidities, not being used to crisis management, meaning not setting sufficiently fast priorities. So they are in problems of access to capital, the farmers organizations and the MFIs. Also, the decisions still go much too slow. Like I say, it's always been a challenge. These decisions on these files for finance go too slow. They don't speed up, so they're still too slow. So it's this management capacities of microfinance institutes that play a huge role. Furthermore, everything that is processing is almost stopped. If you go and look into it, why they have stopped, it's very often a very obvious reason. Or people can't come to work, or the small businesses that run these processing businesses, they can't pay staff. So if we look at finance, and although we stand very much for farmers and farmers organizations, we would like you to make a good difference in what they need. SMEs often just need finance to pay staff. They obviously need.
Or if you could just wrap up in a minute.
Yes. What we would really like is that in the current measures, we look already at a relaunch, and that we treat the long-term challenges. We've talked about productivity and quality. We also talk about communication. We talk about communication between farmers organizations, microfinance institutions, local processors and local traders, because the ones that are winning today are the middlemen. And then we come in, the old cycles of extremely expensive credit at the moment that people need to plant, people need to sell their produce and their perishables. Let's also not forget the environment. The charcoal and wood markets are upside down, and there's a lot of mentioning of extra deforestation and non-environmental friendly practices that come up again. Yeah. Thank you. I will stop here.
Okay, thank you so much, Hannelore. I'd like to move on to our next speaker, who's Jason Scarpon, the President and CPO of the African Fertilizer and Agribusiness Partnership. Jason, let's hear from you.
Am I in line now?
You are. We can hear you.
Good. I'm sorry, I keep getting a beep. Well, thank you. Thank you for the invitation. I'll try not to repeat much of what Hannelore just said. We work in a similar area, but I'm going to focus a little bit more on our input supply chain tracking. AFAP is currently tracking 6,000 small and medium enterprises across Africa. These are enterprises we work with in our network. In normal times, we're looking at trade data, the wholesale and retail financing, infrastructure, logistics, locational information, things of that nature, and then business performance in specific value chains, seed, fertilizer, some agrochemical. What's changed in the last, I would say, 6 to 8 weeks has been 3 new indicators that we've had to add into our system, and they are 1, remittances, lost remittances, both international and urban rural remittances, and the resulting, I would say, farmer purchasing power. How are farmers using our stores? So they're the customers of these stores. What's going on in their purchasing power? And then 3, the health of the agri-dealers themselves. Something that doesn't get talked a lot about, but I think is very important, is how diversified these rural businesses are, at the village and town level. We tend to think of seeds and fertilizers, inputs, the aggregation back to output markets in isolation. But what does it mean to have the husband lose his trucking job because the trucks aren't on the road, or a wife to lose her teaching job because the schools are slowing down, or the relocation of the son who worked for the bank? How does that impact the health of that? I call them country generals. That store that's not just selling agricultural inputs, but homeware, basic equipment, school supplies, a lot of other things. And we have to now track that. We have to now report to our supply chains, essentially the financial health of these retail and wholesale networks. What are we doing in response? There are 3 things that we're immediately encouraging. 1 is the integration of these, I put it in quotes, agricultural enterprises into relief efforts, into response efforts. They do have logistical strength, they have transport, they have warehousing, storage. They can be effective partners, and it's a way for them to capture some of the lost market they have because, again, decreased farmer purchasing power. The second is we're really encouraging and working with large development finance institutions and general development partners to look more at trade credit, supplier credits downstream. We see a lot of money that's being set aside for more banking programs, more loan programs. We don't think that cost of money is going to be easily absorbed into these retail systems, over-the-counter, last mile, however you define them, simply because they were struggling to begin with. As was mentioned in a previous speaker, the high cost of borrowing, the 2 to 3% fees, the 15 to 30% interest rates were very, very difficult to absorb before the crisis. Now they're impossible. So what we're trying to do is work with, I think we're up to about 30 major suppliers now on setting up risk-sharing schemes where they'll allow product to flow down through wholesale and retail networks on credit, on supply credit, and divert some of the development finance and big partners like Agra toward the position of underwriter. We will share your risk downstream. If we can keep these small businesses out of the heavy cost of commercial borrowing and allow them to get supplier trade credit, it will reduce cost. It will help them manage the depression I think that they're already feeling now in most of the countries we work. And then the third one is, and it was just mentioned by both speakers, is that regional food trade. These, with 6,000 enterprises at the retail level, on average serving, 1,000 or so farming families, you have some real scale. You begin, these dealers begin to look like buyer cooperatives. Buyer cooperatives for the inputs, but also as aggregators back to market. So we really want to target during the response, the big relief actors, your WFPs and others that are going to have increased demand on local food procurements, and get these businesses working for them as quickly and as efficiently as possible, simply because keeping them in life, keeping them active will help large numbers of rural, not just farmers, but the communities themselves. They are economic and social anchors out in the community. So those are our three efforts again. One, to just tie in more with the relief effort. Two, to get more supplier credit moving. And three, regional food procurements. And we'll have numbers and stats on how that's progressing in the coming weeks. Thank you.
Great. Thank you, Jason. Thanks for keeping that short because we're running tight on time. So finally, I'm going to hand over to Thomas Essel, who's the Secretary General of Africa. Thomas will speak about what Africa is observing in terms of the impact of the crisis on its member institutions in the ag finance sector in Africa. Over to you, Thomas. Thomas, are you there? Thomas, we can't hear you. Can you unmute your microphone? There.
Hello, good afternoon. Yeah, I'm glad to be part of this great engagement. Let me say that all of us have been affected by COVID, and the financial sector in Africa is no exception. We are aware that the areas that we are serving, particularly the agricultural SMEs, many of them have suffered disruptions in supply chains, disruptions even in their operations. As I speak, some of them, they have their workers divided into two who attend work at various types. Some have lost revenue, some of the agribusinesses have lost revenue, and so many of them have liquidity shortages. So the question is, how are financial institutions in Africa responding to COVID-19? Since I am in Africa, let me give a brief description of what we do. We are a network of financial institutions, more than 100 financial institutions, made up of central banks, commercial banks, development banks, and then microfinance institutions. There are a few insurance and research institutions and NGOs who are also part of us. So with the onset of COVID-19, what has been the response of these categories that we Africa work with? The first is the central bank. Central banks are the regulators of all financial institutions. And since COVID came, immediately the central banks felt threatened. Why? Because if the banks that they supervise get into difficulties, it eventually ends on their door. They also felt threatened and had some challenges in the form of, say, banking supervision. in a situation where there is lockdown, how can they effectively conduct banking supervision on site? As for off-site, they can do that one easily. So the challenge that was before the central bank was, how much support do we give to these banks without compromising on financial stability? So they had to do some balancing, and they came out with individual central banks came out with different measures. But there are areas that those measures converge. One, many of them lowered their policy rate. This is the rate at which commercial banks borrow from the central bank. And it is significant even to note that countries like Ghana and Kenya reduced their levels to an 8-year low. Apart from that, the other banks also made some reductions. Two, many of the banks also have decided to provide direct lending facilities to commercial banks so that they will have more liquidity to lend. Third, they have also reduced their reserve requirements. And that also means that the commercial banks are going to have much more liquidity to be able to lend. Lastly, I will say that another area that they converge is where the central banks have asked their institutions to restructure loans, outstanding loans of borrowers facing temporary cash flow challenges arising from the pandemic. So from the end of the central bank, they have come out with these measures. But I want to note that these measures are more general. They are not specific to agribusinesses. And so the SMEs that we are concerned about are part of this package. So going forward, we are going to see how our financial institutions are going to help this sector. From the central bank, we come to these, the commercial banks. They are another category that we serve. The commercial banks do not lack funds. They have them. Their problem is to find safe, investable areas. And do they see agri-SMEs as safe, investable areas? There is uneasiness in carrying more of the risks of these SMEs, especially within the framework of a lockdown, where some are not even able to move their products to sell them. So there is some uneasiness among these commercial banks. So these SMEs still continue to lack shortage, they lack liquidity. And what we are seeing is an initial slowdown in repayment. Now, as part of the central bank measures, commercial banks and other financial institutions were to restructure loans that were falling due if there were difficulties. So as they do this, it becomes a bit also difficult to lend more. So there is a little bit of a slow demand in that area. And so once demand is slow, supply is also slow. But there is the belief that it will pick up. Because when we go to the development finance institutions and the microfinance institutions, we will see something like that also happening. Now, what measures have they put in place? They have taken on board these measures which the central banks have put in place. They have reduced their lending rates. They are trying to bring more liquidity to the farmers. So it's a matter of the agri-SMEs being bold and moving to these financial institutions. However, they will need to meet the credit requirements of these banks, which sometimes are stringent. Apart from that, they have also adopted safety measures which will allow their customers not to fear in coming to those banks. Development financial institutions are doing well. Perhaps they have more support and collaboration with governments in their various countries. We see that initially there was slowdown in repayment, but they like commercial banks, were also restructuring loans of agri-SMEs that have challenges. And they are also doing more lending. In fact, from their point of view, those agri-SMEs are now requesting more. Their interest rates are a bit softer even than the main commercial banks, but they are lending with caution. One of the challenges they face is that appraisal is difficult because of the restrictions. And exports is also more or less grounded in certain commodities. Those who export to European and American countries, they have difficulties. Countries like Kenya and some of the East African countries that produce coffee, they have this challenge. West Africa too, some of the exports which go to Europe are also facing problems. So those in the export sector, once they have such problems, they are not coming for more loans. But the other places are coming. Long-term, their medium to long-term program includes
We can't hear you.
They are trying to explore that area. Let me move lastly 1 minute to the microfinance institutions. They have insufficient funds. They have challenges with repayment of loans that these agri-SMEs have taken, especially in the rural areas where most of them are farmers. They are not able to pay, so they are rescheduling them. So demand from the microfinance institutions is low. Supply is also low. But the good news that we are finding is that in April, the uncertainties were high, so it was very low. But from May going, they've seen that some of these demands are coming in. So demand is now picking up gradually as they better understand the situations and as they are able to make better assessment of the situation. So they have also responded to positively to the central bank's measures. And as I end, I'll conclude by saying that there is need for coordination, which is a very important factor between the financial institutions, between government, and then the private sector. The reason is that as we are currently fighting coronavirus, we should not forget that food crisis can also be an issue if we are not able to address the issue of financing for these agri-SMEs. So it is important that we collaborate to support these agri-SMEs so that going forward, we don't fall into food insecurity or food security crisis. Thank you.
Thank you very much, Thomas. So we are running short on time. So what I'm going to do is move into some questions for the panelists, and I would ask you to keep your responses very brief. Think about a tweet because we will run out of time for questions from the audience. For people listening in, if you do have questions, please post them in the chat box. And I'll try to make sure that we get to your questions before we wrap up. So for the first question, I'd like to pose this to everybody on the panel and just ask you, from your view of the financial and food system, what key innovation or opportunity do you see emerging in the COVID-19 response, and what role does technology play in our responses to COVID-19? So can I just run through our different panelists, starting with you, Maximo?
Sure, a pleasure. I think one of the key things that we will observe is reducing the physical distance to markets, and that's where ICT technologies will play a crucial role. And for example, what we observed in China was that the e-commerce accelerated, and that's something that we can explore in sub-Saharan Africa. The same applies to storage capacities, cooling and drying facilities, and how we can link those to the financial sector. I think that's essential to do the best we can with technology to give access to credit to small farmers through a proper mechanism of warehouse systems. Okay.
Thank you, Maximo. Hannelore, do you have any thoughts on that?
Thank you. They're very much in line with what has been said. So I think I'm more pragmatic. Digitalization of farmers' organizations, but not just for the internal coordination, but very much digitalize everything that is connection with MFIs, local bank systems, digitalize markets, predictability of markets. So it's the whole e-commerce, but for agricultural products. Also digitalize everything that is administration linked to movement of food, because now that depends on people and on many, many steps. There's nothing digitalized there. And especially make a communication platform, digitalized platform between everything that is finance, local private sector, and I mean processing a lot, processing sector and farmers organizations, which are also private sector, but these three, this continuum, link them. Thank you.
Wonderful, thank you. Okay, Jason, any thoughts from you on the opportunities and the role of technology?
Yeah, I think one opportunity that's key is to develop qualified buyer schedules immediately with major suppliers of inputs. Off of those schedules, one technology development, camera capture. Basically, right now we have the capacity for our dealers up at the wholesale and retail levels to take camera pictures of trade sheets, deal sheets, what they sold, what's moving. It's going to make supplier credit a lot easier if in real time they can track what's moving in and out of the stores and who's paying where. It's how we properly assign credits.
Great, thank you. And Thomas, lastly, over to you on this.
Yeah. Already it is very clear, we see the promotion of light cash holding. And that means that people are encouraged to be hooked onto the digital area. We at Africa, even before COVID, was trying to look at harnessing digital revolution to support lending. Because in hooking on to digital lending, you have speed, you have efficiency, and you have cost reduction. And these are things that have come to light with COVID. And the banks are beginning to exploit that. And this is something that Africa will push across the continent once this thing goes down. So it's an area that we are interested.
So a lot of you have talked about digitization, and we have a question in over the chat. So let me just put that question to all of you. Who should pay for digitization? It's a big process and it's often expensive. Who should bear that cost?
Let me answer in terms of the technology. For the digitalization, of course, it's cellular phones, but also broadband, which is what we need, and Africa still doesn't have that. And that's an investment that could come from the government with the private sector participation, in the sense that this can be put in concession to private sector, but the initial specific investment could be done by the government and then managed by private sector. But again, we have now technology, especially with the new satellites that are flying low, that can provide very cheap access to internet, extremely cheap, that smallholders will be able to access to it. Of course, it won't be the full-blown 4G or etc., but it will be good enough to be able to do the transactions that I need to do. So technology is evolving, but the backbone has to be set up and then given management.
Anybody else like to jump in on that question? Who should pay for digitization?
Yeah, I would say we go after the major input suppliers. I think it's a trade-off. If you share their risk, if you underwrite their risk, rather than paying a fee for that, as a development institution, we don't charge a fee. We charge a matching investment, and we usually steer that towards digitization, training, and support for those downstream players, their capacity building. So that's one target market for it.
Anybody else want to jump in on this?
Maybe.
Please.
Yes, I think that there's different type of costs. In digitalization, I think the basic infrastructure, which you will need anyhow, that's government costs. That's clearly an externality to the market. But there should be running and maintenance costs paid by the private sector. And I see that happening from platforms or funds from interprofessional organizations, but really decentralized ones, or the ones that can decentralize and come to the local level. I think it's so much into the interest of each of them. Yeah, of each of the one participating in value change. Thank you.
Thomas, any thoughts from you?
I think that for the financial sector, I think that the governments of the various countries should partner these private sector institutions to promote digital lending. And I will share the view of the first speaker that normally when private sector people manage things, they do better. So I see a public private sector participation in promoting the digital solution that we all want.
Okay, we have a follow-up question for you, Thomas, on the banking sector. So we have a question from the room on, are there any new initiatives for new loans for farmers and agribusinesses among your members, or is the concentration really on managing and existing liquidity and just helping get through the existing loan cycle, because so many lenders are now under pretty serious distress in a lot of markets. So are there any new lending initiatives in response to the crisis, Thomas?
Not yet. Now the mood is how to manage the crisis and then move from the medium term to the long term. However, some of the development institutions are thinking of some other innovative means. For example, because of COVID, in Kenya, for example, movement of livestock from the rural areas to the urban areas for slaughter is more or less put on hold because of the restriction. And that aside, there is also the fear of transmitting any disease that is there from animals to human. They call it zoonosis. So because they want to avoid this possible transmission of zoonosis, what they are doing is that some of the financial institutions are thinking of going to set up slaughterhouses in the rural areas so that these livestock, where they are dominant, will be processed in the rural areas instead of bringing them to the urban areas. So they are now in the mood of thinking of what to do. I believe by the next session, we will have gotten some concrete innovations that some of the financial institutions want to promote.
Okay, thank you. So I have another question that I'd like to direct to all of the panelists, and this is sort of a big outside of the box question. But if you had magical powers and you could get one group of actors, governments, donors, the private sector, financial services providers, researchers, any of them, to do one thing in their response to COVID-19, what would it be?
Work together.
Nice one. Okay, Maximo, work together. Anybody else have thoughts on that?
Give priority to agriculture.
Say that again, Hannah-Laura?
Give priority to agriculture. That's not the case for the moment.
I will say that we should give sustained support to agri-SMEs, because the situation in which we are, they literally have to be held by the hand. So they have to be sustained, monitored, and helped to go over this phase.
Okay, Jason, did you have anything you wanted to add to this?
Yeah, I'll be very specific. I'd like to see about a 20% reduction on inputs distribution, free inputs distribution, move towards underwriting of these guarantees from suppliers, manufacturers, importer, wholesaler, retailer, outlet, complete slipstream. In doing that, I think the leveraged cost reduction will exceed the value of the inputs fivefold. I really do.
Okay, so I'm going to share another question that came in online. So women farmers faced issues accessing finance before COVID. What should be done during COVID to help them retain and improve their access to finance? And also how to ensure farms' profitability during COVID so farmers can benefit from lending. Would anyone like to address the question about women's access to finance, but also farm profitability while there's so much stress out, so that farmers can actually benefit from lending? Does anybody want to respond to that?
I can respond on briefly on women's finance. I think it's an opportunity to do the structural changes that were needed to do. Basically, the problem is lack of access to assets and not recognition of their property rights of what they produce. And that can be changed basically by assigning certain level of property rights over the production and the share in the production through arrangements on where they distribute their production. So, for example, if they have contract farming arrangements, and there could be institutionality behind where the production is not only owned by the maid and therefore the revenue comes to the maid, but it has to be shared based on who produces what. The problem is, of course, land title could be an option, but the problem is that sometimes that's very complicated and could take substantial time. So there has to be a mechanism in which revenues can be shared between male and female, and that will give them access to the markets. The other option is also through the mechanism of warehouse receipt systems. Because what the warehouse receipt systems could do is giving them property right of what they store. So if the warehouse receipt systems are solid enough and they have a time, they could try to arrange ownership of that ticket that it comes out of the warehouse receipt system so that female also can have financial access to markets, because the ticket will be exchanged in the financial markets. That's where they could have access. Now, in terms of profitability of the small farmers, for us, the major problem right now is recession and reduction of demand. So it's an issue of access to food. And what to do then is basically we have to provide them tools that will allow them to cope with 12 months or more of a recession. And one of the things that we believe is good mechanisms of storage on one side, but also trying to identify alternative demand mechanisms to them. I know that talking about regional trade sounds like macro, but it's pretty micro at the end of the line, because if we are able to get the standards in place, and these small farmers which normally won't be able to have access to these markets at the regional level, or even at the sub-regional level of the RECs in Africa, will have significant possibilities of the reduction of demand.
Thank you. Would anybody else like to come in on that question?
Yes, please.
Go ahead, Hannelore.
Yeah, while recognizing a lot what has been said, I will not repeat it. I think it's very important. I think we have to stress more the issue of communication. But even of microfinance institutions, sorry that I always talk about microfinance, that's where most small farmers, smallholders come to. They haven't communicated well to their members. They haven't said we remain open. That's why you get this. You said they haven't said there is still credit possible. Secondly, put priority on it. As a microfinance institution, give half of the loans for input for women farmers. I think that is putting priorities. And thirdly, make sure that they belong to groups. Whether it's a women group, whether it's a farmers organization, it's a cooperative, I don't mind, but don't let them alone. Then they cannot do anything. They're not considered as an actor. Thank you.
Anybody else?
Yeah, I would jump in with one. Right now, the African Development Bank is sitting on a considerable amount of funding for women in business and support there. Now, I think a lot of attention is in designing new financial products and new financing. I think an immediate, maybe the pandemic can give us that urgency. Some of that money should be used for reducing or waiving the heavy collateral requirements. Get the money pumping. The bank has so many loans out there with all these different SME programs, and the money's not moving out. Particularly with fixed asset financing, if you could waive some of these heavy 150% collateral requirements and bring it down to 50, it would have a major impact in bringing more women into the borrowing.
Thank you. So I'm going to pose one more question that came in from a couple of people on the line and ask you to just each give a very brief response. So a few of you have mentioned collaboration, right? So one person asked, what are the barriers to better collaboration? And a second person said, I second that. We talk a lot about collaboration, but see little of that in action. So what can be done to make real collaboration work? And I'll just go through all of you from Maximo down to Thomas. And if you could give a 1-minute response, because I now next need to hand over to Michael Helm to close us out. So Maximo.
Okay, but very quickly, I think one of the major problems of collaboration right now is lack of information. So very few database where you can see what projects are being implemented where by who, in terms of donors and agents and NGOs and so on. I mean by that is, I mean a database where I can see geographically where they are located and what type of commodity they are touching, what type of problem they are resolving. And that is not existent. And duplicate things and move independently in silos, which is what created a lot of the transaction costs we face today. So if we are able to to at least reduce the symmetry of information and have a common platform of information so that everybody knows who is doing that. That could create an incentive for collaboration. The other mechanism which is important is how we can attract private sector and how we can attract public sector to work together. And that's basically to enable the environment and to create conditions in which private sector will know of areas where there is potential for operating with them, but that they have clear rules in place so that they don't take advantage of that. And that requires institutional investment. Normally, when you get the loans from the MDBs, they don't have that component next to it, and that's what we need to put in place. Sorry.
Okay, 1 minute from each of you, because I want to make sure there's time for Michael. Hannelore, do you have any thoughts on collaboration?
Yes, first of all, there is a lot of collaboration, but it's too much ad hoc and unpredictable. So I do also believe that the information sharing, but not just on the products, but on information sharing between these actors will certainly improve the incentive to systematize it. Secondly, I think in each of these actors there's work to do. I look at the perspective of farmers' organizations. Even the information flow within a farmers' organization has to be worked on and has to improve. But the same with local governments, that they also have an information duty, I think. Also, data doesn't flow always, and same with the microfinance institution, the information and communication sharing. Inside, they have to create that capacity. I may also share that several of these
Hannelore, I need you to wrap up because we're running out of time. So
okay, good.
Okay, Jason, over to you.
Yeah, through the private sector lens, I would say the further you go downstream, the better collaboration and coordination you get. You know, the big global corporates, they're fierce competitors, but when you go village to village, town to town, and you're dealing with retailers and wholesalers, they already work together. They're already associated. And if we can put and prioritize their needs first, you're going to see better coordination in ground response.
Thank you very much. And then finally, Thomas, the last word to you on collaboration, then I'll hand over to Michael.
Definitely collaboration is very important. We should only make it more serious than we have done in the past. We should make an assessment of what each player is bringing in. That is important. And then also what each player will play. If we share information around all these, we will know where each of the collaborators fit. And once we agree and have a common basis for the collaboration, with each one ready to play its role, then that is the way to go. So that is it.
Okay, thank you very much, Thomas. And I'd like to thank all of the panelists for their very thoughtful contributions this morning, afternoon, depending on where you are. And thank you all for listening. I'll hand over now to Michael Hump, who will make a few closing remarks. Michael, over to you.
Thank you, Greta. Thank you to all the panelists and the really rich contributions. And this webinar was just meant to kick off, more of the debate of the different partners around agribusiness, from the production side until up to the level of the consumer side. More has to be discussed, more has to be analyzed, more need to be managed in this process. What I've heard this morning, this afternoon, depending on where we are the two words, uncertainty and unpredictability. So this is, I think, where we are right now. To go back to Maximo's phased view on the situation, I believe we are still I believe you all agree, we are still in the containment phase. So we are still at the beginning of this pandemic, the impact of the pandemic and the crisis. We are getting better by the day. We are getting better in terms of analyzing, getting more data. We are getting better in projecting, but still, overall, there is a lot of uncertainty and unpredictability. We see the impact is different. If we look at the agricultural value chain, the producers are affected, but perhaps the cultivation side, the primary sector, is less affected than anything else. More seriously are those actors in the secondary and the tertiary sector in the value chains. And we see we see the strength of collaboration, but also conducive environments. I relate to those who are in charge of supervising, regulating, and having the power to mobilize resources for the market players. And we see the big opportunity for mutualist, cooperative, associative approaches of actors in the value chain. So not only at the level of the farmer producers, the producer level, but also the aggregators, the post-harvest actors, whether being in trade, in storage, marketing, cross-border trade, and the like. Technology again has a powerful meaning in this crisis. It can really demonstrate the enabling aspect. I saw this as a first question and very massive response with respect to the opportunity in e-commerce to connect the farmers, the surplus produce on the countryside, and how to bring it to the cities and the consumers there. The importance of automation systems, digitalization, platforms, communication, and again, leading to transparency of the actors, which is quite disrupted. I think one can wrap up best with the catchwords mentioned by the panelists. If they had one sentence or one word to say how to approach the crisis is working together, prioritize agriculture and agribusiness, do every effort to sustain the agri-SME sector. That's key for all of our supply, for the supply of the market. Reducing costs of supplier credit and relax or waive collateral requirements, which are very high for the actors. I think that's in a nutshell what I've picked, without repeating all the important statements, contributions made by the panelists. Over to you. Greta? Panos?
Yes, thank you, Michael.
Who's going to close the meeting?
Yeah, let me close the meeting. Thank you, everyone, for attending. We had a great discussion, very rich. This is the first of many to come, as Michael mentioned. This is a webinar that we wanted to look at more of the big picture, the 30,000 feet view, and identify the key issues. I think next we're going to be planning more specific on topics that have been identified in this webinar. And we will get back with additional discussions on specific issues for the COVID-19 and agriculture finance. Again, thank you very much, and please stay posted on announcements about the future activities.
Thank you.
Bye all.
Goodbye.
Bye.
Thank you.
Bye.
Bye.